Just 3 hours ago, we've seen a big red flag emerge across the Bitcoin charts, and that is the 3-day time frame death cross between the 50 simple moving average in red and the 200 simple moving average in green. This has literally just happened. Now, if we scroll back throughout Bitcoin's price history, we can see this death cross historically has lined up with pretty big drops to the downside on Bitcoin. I mean, it's in the name, it's called death cross. That's not exactly a bullish name, right? Here you can go in 2018, you see that death cross causing the final crash of the bear market, and actually the same thing occurring back here in 2014, the death cross occurring during the final crash of the bear market down to the bear market low. Now, I'm going to be zooming in on this death cross today, taking a look at it, taking a look at what generally happens after we see it in terms of not just us going downwards, but what specifically happens during those drops, because there is a bit of a pattern that has emerged over Bitcoin's price history. I'm going to be reflecting on the actual local data and kind of putting that in comparison with what the death cross expects. I might have a bit of a different view to a lot of YouTubers on this. In fact, I did a video just 7 days ago on Crypto Career University. Crypto Career University strongly believes this death cross will cause the final drop of the bear market and that the bear market bottom will come within about 30 days. I disagree with that massively. You can go watch the video for more details on that specific claim that he's made. In this video, I'll address what I think is the logical argument, because I actually don't think that argument is logical at all. So what is the death cross? What generally happens after we see it in price terms and also in structural macro terms? And what can we expect next? Before we dive into it, go ahead and check out the Bitunix Exchange. This is a global non-KYC exchange that has never been hacked before, right? Never been hacked in about 4.5 years of being on the market while maintaining global status. That's very rare for exchanges these days. In fact, it's basically unheard of. That's why I use Bitunix personally, and that's why I reached out to them for partnership so that I could talk about it to you guys with my referral link down below. Now, with that link down below, you can get a 15% lifetime trading fee discount. That's 15% off fees on every single buy and sell you make on futures or on spot trading for life. So that's a huge discount there. Use that link to help out the channel and help out yourself by getting on this great exchange. Links down below. Let's dive into the content. Alrighty, so what we see here is the 50 simple moving average in red and the 200 in green. And essentially when the green line crosses below the red line, we see what is called a golden cross. And when the reverse happens, we see what is called a death cross. Now, without going into too much unnecessary detail, the underlying thesis is that when we see golden crosses and death crosses, we see bullish and bearish reactions. So obviously a bearish reaction to a death cross and a bullish reaction to a golden cross. Now, even this, by the way, is quite debatable because there's debate as to whether moving averages are predictive indicators or reactive indicators, right? Do crosses cause downside price action, or is downside price action, occurring already, which results in the crosses coming? And there's an argument to be made on both sides there. I would actually lean towards the latter argument. In order for a death cross to occur, we already need to be in a macro downwards trend. Otherwise, we wouldn't see these indicators crossing in the first place. And so if we're already in a macro downwards trend, of course it's going to look like the death cross is causing further downside price action, when in reality, actually that's not the case, right? Because further downside price action's just going to be occurring as it generally does in a macro downwards trend. So I actually would challenge the credibility of any sort of projection or prediction made based on a death cross to begin with. I don't think they're predictive indicators to begin with. But in this specific circumstance, I can understand why people are giving it a little bit more credit, and that's because it's led to very specific types of drops. So let's zoom in on that point for a second. What types of drops have happened due to the death cross in the 3-day chart? Well, we've seen exactly on 3 separate occasions 30-day corrections. Okay, so the death cross occurs, we see a correction lasting 30 days before a next macro low. Same thing over here in 2018, 30 days before the next macro low. And same thing here in 2021, 30 days from the cross to the next macro low. Now, Crypto Career University will have you believe that was the bear market bottom. It simply wasn't. The bear market bottom was much lower. So it doesn't make sense to think that this will be the last drop of the bear market just because we've seen a death cross. But given the fact that we have 3 data points of 30-day corrections after the death cross before a next important macro bottom, look, it's worth taking a little bit more seriously than usual, okay? If I'm looking at the 1-day chart death cross, for example, I don't take it seriously at all because of what I said before. Death crosses occur due to preceding price action, they're not predictive of future price action necessarily. But in this case, given the fact that we have 3 data points of the exact same length of a move occurring after the death cross, I'll take it a little bit more seriously. But I'll maintain rationality as well. It doesn't change what we're seeing. We're not seeing a predictive indicator occur here. We're seeing a death cross. We're seeing a moving average cross. It's happening because of what's happened before. It's not necessarily predictive of what will happen in the future. But let's take it a little bit seriously because, again, we have 3 data points of the same thing happening. And also, more importantly, we have other collaborative data which kind of supports the argument that Death Cross is making. Right, so let's just 1 second. What is the argument that Death Cross is making? It's making an argument essentially that we will drop down from the current support zone into a new macro range. And 30 days from now, because the Death Cross happened just then, we'll see the low of that macro range form. So for example, we might be going from here, this current support at 60,000, to a new support zone at 53,000, and we're going to reach that $53,000 support in 30 days. That's a hypothetical argument based on the Death Cross with the data we've seen historically. Usually I wouldn't take it too seriously because of the nature of moving average crosses, but this time I actually think it is worth taking a little bit more seriously because if we look at something like the daily chart Bollinger Bands, we can see, for example, that we have Bollinger Band compression, meaning we are due in terms of compression sensors for the next move. The next move is meant to be coming shortly. And even from a more structural perspective, I've made the argument over and over again that we're copying 2022. I stand by it. We saw an ascending channel into horizontal major resistance, and we dropped down from that channel to the next support level, which was pre-identified in the bull market. Same structure this time. Horizontal major resistance rejecting the ascending channel, dropping below the channel into pre-identified support, which in this case is coming from a 2021 all-time high. And in 2022, we sat on that support zone for about a month. This time we've been sitting on that support zone for almost a month now. And now we're seeing Bollinger Band compression. If we're continuing to be copying 2022, it would make sense for us to continue to the downside sometime in the next few weeks, right? And now that the Death Cross has come along and said, all right, we're going to be reaching our next macro low in 30 days. Yeah, look, it would make sense for a correction to occur shortly here and for that correction to extend for about 30 days until we reach our next support plateau. It doesn't make sense to think that the bear market's going to end in 30 days, but it does make sense to think a crash is coming and we'll go down to our next stop before our final destination at the end of the year, the end of the bear market. So that's kind of all I have to say, really. I guess the other thing I can say is, well, where is that next stop going to be? Well, we can just take a look. We don't know for certain, but we can just take a look at the volume profile, for example, and we can see, well, the next big support zone below where we are currently is at $53,000. So maybe 53K is where this drop will take us, right? That would make perfect sense. Between basically 48 and 53, there's a support block by horizontal means and by volume profile means. So I'm not only looking at the Death Cross when I talk about this. Again, the Death Cross is one of many things I'm looking at, and it's actually not really much by itself. But given the context of the Death Cross, the context for Death Cross is happening within is a context of us copying what we've done historically, and even within that structural fractal of what's happened historically, we are kind of due for the next move shortly. So this Death Cross is just another piece of evidence stacking onto that argument. So I would expect within March a move to occur to the downside, and I would expect within March us to reach $53,000 to $48,000. But as is usually the case when it comes to macro calls like this, I'm not acting on this yet. I'm not sitting here and saying, oh yeah, I'm entering short positions today. I do wait for range-bound confirmation. So right now, the bottom of the range is at $60,000. If I'm going to be taking a short position, I won't be doing so until that breaks. I'm a breakout trader fundamentally, and breakout traders work with theories. So we have theories, and in this case, the theory is we're going to be reaching that next support zone at 53,000 in March. That is the theory, but the theory needs to be validated by price action, right? And price action validation of that theory, right? Taking that theory from just a theory to a reality that is currently going to be occurring requires the current macro range to break. So that's going to be a $60,000 breakdown. So I am taking this Death Cross relatively seriously, but not simply due to the fact that it is an individual sole indicator. I'm using this Death Cross in conjunction with pre-existing theories that I have, to assume what will happen next. And ultimately, I do think that we'll be at $53,000 by the end of March. That doesn't mean I'm acting on it currently. I'm going to wait for breakdown validation. But to me, that makes a lot of sense currently. If you want to see why I disagree with the idea that this will be the last drop of the bear market, go watch this video from 7 days ago. You can see what I'm highlighting right now. Thank you for watching, guys. I really hope you enjoyed the video. If you did, check out the link down below. You'll get a 15% trading fee discount to Bitunix. Now, the reason you do that is because it's a global exchange, it's non-KYC, and it's never been hacked before. You'd be helping out the channel a lot by doing that. In fact, this is free content, and the Bitunix ads are the only thing that make it possible, really. Otherwise, I'd be making you pay for videos, which I don't want to do. So help out the channel by using that link. Also subscribe, like, and comment, everything you'd usually do for a YouTube channel. Appreciate it, guys. I'll catch you tomorrow.